Welcome to Global Money Talk, brought to you by SamProTV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blair, and joining me on this Thursday morning for today's market briefing and to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Tai, good morning.
Good morning.
Well, we are seeing U.S. stocks rallying, the S&P 500 hitting a new record high, and this does come on the heels of data as well as earnings from Micron. So what do you make of what we're seeing today?
Well, Micron is the big story. I think it might have opened up 18%. They had a great earnings report showing a lot of demand for their chips. And what's important to know about Micron is they make RAM, random access memory, and DRAM, dynamic random access memory, which is what makes in part your phones and your computer so powerful, is it can take a lot of it allows your computer to do a lot of things, particularly at the same time. So, I often have 40 tabs open, and it's because there's so much power in the little laptop. So Micron produces these chips, and it's a good sign that there's so much demand, because you can have all the GPUs from NVIDIA that you want. You can't stick them in a box and have them work. You need that, sort of that DRAM and that RAM to really help produce all the things that it's supposed to produce. So this is a really good sign. It's a good sign for them, obviously, and it's a good sign for the sector. I mean, I think they're down from the open, but they opened up, I think, 18%. There's a little bit of profit taking, but this is, I think there may be some value here if we get down to sort of reasonable levels after a little correction today.
And as you mentioned, on the heels of the Micron earnings, which came out yesterday after the closing bell, we are seeing a double-digit percentage move to the upside for Micron, and also lifting other semiconductor shares in New York morning trade.
And you mentioned data today. We had some final GDP data, which pretty much on consensus. But I would note, actually, the weekly claims came out, and it's down at 218,000, and that's below 220. It seems to signal that certainly the employment sector, the employment area is perhaps a little healthier than expected, because most people, if they're out of work and there's an unemployment check waiting, surely they're going to claim for that unemployment check probably as soon as they can, or at least most people will. So the fact that claims have dropped over the past few weeks, particularly the last 2 weeks, I think is important. And we'll see with the next employment report, which will be out in a little over a week.
And as you mentioned, we saw those weekly jobless claims numbers for U.S. filings decline and come in below expectations, but also continuing numbers as well. They also came in below estimates, so that is a good sign, Tai, as you mentioned. And next Friday morning here in the U.S., we will be getting the September employment report. So it's interesting to see how weekly jobless claims has become an indicator that the market pays attention to, especially in this rate-cutting environment.
Exactly.
And also this morning we got durable goods orders, which came in better than expected, and we are seeing that on the heels of this data, the market is rallying. So do you want to weigh in on durable goods? Or
durable goods is a little bit of a strange, not as strange, but it's kind of a volatile series in terms of some big ticket items can move it a lot. It's always a good sign to see durable goods better than expected, because it represents long-term investment, and long-term investment indicates confidence in the market, that I'm going to buy a piece of equipment, I'm going to spend a lot of money on a piece of equipment now because I think I'm going to need it for the next 3 to 5 years. So a healthy durables picture is really important in that it shows confidence, and this may be confidence born of the fact that the market sees, and managers and CEOs see, that, listen, the Fed is cutting rates, we are probably going to get a soft landing, and we need to invest. If we've been waiting to invest and we really need to, we'll do it now. And you expect those numbers to continue to get better as rates come lower.
And you mentioned big ticket items. So for people who might not be familiar with durable goods and what that entails, I do want to hear about this, especially because we're talking about China's economy. And even though you get stimulus measures, that it actually takes a while to build up that confidence when it comes to businesses or consumers.
Yeah, and And really, it's kind of a pun, but really isn't. It is all a confidence game. And there's confidence, I think, in the U.S. or confidence is starting to build back up again. Although you wouldn't know it from consumer confidence, which had a kind of a bad read earlier in the week. But I think business confidence is percolating and getting a little bit better, which is important because that confidence is what actually starts to bring jobs back. Now slowly, because you'll want to run lean, but when you run lean for a long time, you're like, we need to get a little more productive capacity. That's when you start bringing in jobs. So durables, let's say just pick a durable good. I mean, if you needed to buy a big machine, let's say you're a smelter for some reason, and you want to buy it, that's a big investment. And if you're willing to go and buy that, it suggests that you see possibilities on the horizon, because that's a machine that's millions and millions of dollars. It requires people to run it, to maintain it. So this is generally a good sign for the economy when your durable goods doing well. But in terms of concept, you just mentioned that. I think we should take a look at what we saw in China overnight, which was, I think, a bigger positive surprise than what the market was really even looking for. Functionally, the Politburo, which is the 24-person sort of senior members of the party, now they report up to the Standing Committee, which are the top 7 guys. And it's guys. There are no gals on the on the Standing Committee. I'm actually not sure how many women there are on the Politburo, but no gals on the Standing Committee. They really run the country, and President Xi is at the head of that. But the fact that they chose this meeting, because they usually don't talk about economics at the late September meeting, it's usually different the other meetings in the year, suggests they really got the message that we have a problem here, and we need to now take care of it before it gets really bad. And we spoke earlier this week about how there's so much political will in China. Now, the political will is focused on fixing the economy. We got the monetary stimulus in two shots earlier this week, and this is really the big one. It's why Chinese stocks were up so much, and many of the indices have erased this year's losses. They've said, we're going to put almost $300 billion of fiscal stimulus. Now, details are still a little sketchy because it is, I think they've really just worked it out, and you'll get more, I think, after the Golden Week holiday, which starts October 1st. But they said $300 billion, half of that is going to go towards local governments. And local governments have really been struggling because they made their money by selling land. Well, there hasn't been so much land in the past few years as developers have really gotten into trouble. So they're struggling with finances. They're cutting back the benefits and the wages of public employees, and it really has been a tough slog for the local governments. Half of them are going to help local governments, and the other half is supposed to stimulate the property market. I don't know how they're going to do it, but if we think back to the late 90s, and the Chinese economy was in a lot of trouble, what did they do? They set up a lot of bad banks, and they bought all the loans from all the bad loans from their big banks, and the government eventually took care of them. But that unleashed the banks to be able to lend money, and it spurred the biggest, from 2000 to 2012, probably the biggest decade of growth in Chinese history, really. And it's because they made the banks healthy again. So is it now very different time, and it was, this is after Deng Xiaoping, Jiang Zemin was in power, and he said, all right, everybody, let's go get them. Grow every which way you can. And they had an unbelievable, almost 2 decades, right? But now the thinking has changed. This is a big bang. I think it's too soon to tell how effective it will be, whether it really turns the thinking around. But right now, I wouldn't short anything Chinese, and if you're still short any dip, you need to buy it back, because the game has changed. Whether it has permanently changed is a different story, but financially this is going to be great for the financials and the stocks.
Yes, heading into today's session, we did see a Bloomberg news report that China is considering a multi-billion-dollar capital injection into state banks. So ahead of that holiday that you just mentioned and that we've been talking about all week, we'll see what else comes out if there is any other announcement.
Yeah, we'll see if there's anything this week, and then they'll offer an entire week, and the market will try to sort of digest it. But when they make a decision, remember in COVID they had lockdowns passed when everybody had lockdowns. And it got to a point where the citizens were really getting very, very restive. And one day they said, all right, we don't want to have any real unrest. And one day they said, okay, no more COVID crackdowns. And it was sort of that quick. So this is an example of their system at work. It's different than most of our systems.
And before we take a look at the markets, because you were talking about the U.S. consumer as well as consumer confidence here in the U.S. for businesses as well as consumers, after the closing bell today, we're going to get earnings out from Costco. So we've talked about the big box retailer in terms of the consumer, but also when we're doing the segment, our market insight on gold, we're talking about Costco. So what will you be watching for in those results for earnings ahead of the closing bell today?
So, Costco is a pretty good barometer of the consumer. So you really want to, and they're a kind of a special company. They only take 11 to 15% markup. That's all they take. So there's, when you look at their results, you really get to see how the consumer is doing, how much are they buying, their same store sales, usually they're usually very, very healthy numbers. It'll give you a peek at sort of consumer spending. So that's a really good point. That let's say we'll take a look at them. They're a really well-run organization. I think they're a great disinflationary tool because they sell so many things at really good value. And by the way, they're still selling the
and the hot dogs too.
And the hot dogs. But they're still selling those gold bars. A limit of 5 per person. It just keeps going up every time.
Yeah, I know. And speaking of which, we are seeing spot gold prices higher once they broke above the 27 level, didn't they?
So it really moved up sharply this morning. It's come back a little bit. The Chinese fiscal stimulus is a tide that has lifted all boats. So, certainly the precious metals. I mean, silver galloped to its high since I think it might have been 2011 or 2012 when it was sort of on its way down from 50. So silver's been up a lot in terms of percentage changes, but it is such a valuable mineral that you can see if silver gets going, silver is one of those single commodities that can really gallop a lot in a short period of time. So we break higher, new highs in silver, over a decade highs, may have a little more legs in it. So I think people will like that as well. The other thing I would mention in terms of metals are the base metals.
Yes.
Copper soared above 10,000. Trading above $10,000 a ton now, and it's because, well, if they reflate China, this is really going to be good for base metals. At least that's the immediate reaction. Now, whether they're actually going to build more, is up for debate. They've actually said they don't want to build any more housing. They just want to get rid of the housing that's been sitting on people's books. Maybe the government goes and buys apartments at some kind of value and sells it relatively cheaply to people who can't afford apartments. Now that would be really interesting stimulus, but remains to be seen if they'll do something like that. But they've said they're going to issue hundreds of billions of bonds to pay for this. So
yeah, we'll keep an eye on base metals this week as we head into the final trading session of the week tomorrow. So we'll see what happens, especially after the PCE figures that we will be watching tomorrow.
And the Fed will be watching closely.
And we do want to take a quick look at where the markets are this morning. And let's start out by looking at the Dow Jones Industrial Average. So we are seeing a triple-digit rally this morning, and it is higher by 0.4%. And as for the NASDAQ Composite Index, we are seeing that index higher, and they are off this morning's high above 1%, as we're seeing right now. And it does look as though the chart is showing that dip right as we started our show at the top of the hour. Meanwhile, the S&P 500 hit new record highs, and in New York morning trade is up just about 0.25 percentage point. So a lot to keep our eyes on this morning. And before we move away from what we've been paying attention to, let's take a look at U.S. crude oil prices, because we are seeing a pullback in crude oil, and as a result of that, in terms of laggards, we're seeing some energy names pull lower today.
So we had a really nice bounce in oil, but I was always concerned that it was a little corrective, and then now it looks like that's borne out. And the reason that we saw the big dip in oil today was Saudi Arabia said that there reports that Saudi will be abandoning their $100 target a barrel for oil, and that they may increase their production. Partly that's, I think in part, they want to regain some of their market share, because the problem with the OPEC cartel is, and as long as it's existed, is rampant cheating. You're supposed to only pump 600,000 gallons. Well, if I pump 800,000 gallons, I can get a little more money in the kitty, and it's good for me. And Saudi has always been the enforcer. If people are cheating too much, they'll say, we will flood the market with crude unless you guys behave and stop. The other story is Libya, which has had two factions in the east and west fighting for many months. They couldn't agree. The two factions couldn't agree on somebody to run the central bank. And I think they finally agreed for somebody to run the central bank, and they want to restart their oil production because they're probably not getting a lot of tourism in Libya. So you really want to start oil production and bring foreign currency back in, and help the economy run a little bit. So if Libya restarts, they're not a gigantic producer, but on the margin, it's substantially hundreds of thousands of barrels a day. So if they start and the Saudis flood the market, and that's why we're getting this big correction in crude, it's also really hard for non-professional investors to trade oil because of the futures and the futures curve. And someday we'll go on a Market Insight and talk about that. But you really have to trade it through the through the energy companies. Is probably your best proxy for the retail investor. So I think we'll get a little bit of a correction. We'll stabilize around here. Let's see how it goes. But that earlier rally, the past couple of weeks, has been corrective.
Yeah, surprisingly, we've seen a lot of action when it comes to crude oil this week, WTI as well as Brent. And as you mentioned, production as well as demand concerns, given what's happening geopolitically, as well as growth stories from around the world. Yes,
absolutely.
And now I do want to move on to our stories of the day that we have been watching. So let's start out by looking at OpenAI. So we got the news overnight about their goal for the organization, not for profit to for profit.
So this is really interesting because they were sort of a non-profit, but they started to lose some talent. And AI is the hottest thing out there. If you're an AI engineer, they couldn't throw money fast enough at you.
Yeah.
I am sadly not an AI engineer, but throw a little money at me. But they've lost, and yesterday there was a big shock, a woman named Mira Murati, who was a woman chief technology officer, who rolled out ChatGPT, right? She quit. Or she quit, or she's resigning. The date to be determined. They've lost some real talent in there, and you realize that a not-for-profit company, you can't compensate your top talent like you can if you were a for-profit. So I think they're going to be they want to be a for-profit public company, so sort of an altruistic company that do good but also make a profit. Hopefully they do a better job than that's what I think Sam Bankman-Fried originally had planned to do, and I think went horribly awry. But if they can do that, if they can get, this could make Sam Altman, a billionaire. Great for him. But what's more important is you don't want to gut the talent behind him, and you want to, and for the money that's being shown to folks like this, especially senior folks, to keep them in the house, you've got to be able to pay them. And to be able to pay them and to give them, we'll give you, Mira, maybe we'll give you 1% of the company, stay. Or something of that nature. I mean, I'm just riffing here a little bit. But to keep the talent in-house, it's a lot easier as a for-profit company, and that's why they're doing it. And I think the drivers are all good. Why is, I always remember Ken Fisher saying, capitalism finds a way. You put a profit motive in front of people, and the ability to become, really, really wealthy, they're going to work really hard. So I think this is a smart move.
And when you look at the demand for AI, especially Gen AI, and we look at some of the salaries, starting salaries, right, entry-level salaries for some of these organizations, it's
telephone numbers. Yes, good for them. Good for them.
Yeah, so that is something to keep in mind. And as you mentioned, this exodus of talent. And when you're thinking about for-profit versus not-for-profit, it's not surprising that some of the talent has actually gone on to start their own AI competitors, right?
Right, and try to build it up to a $3 billion company and get somebody to buy you out, right? And the question then is, am I selling too early, right? So you don't want to sell too early, but you also don't want to miss the boat, sort of. But there's a lot of room for talent. AI is in such huge demand, so I think this is a smart move, definitely.
And when you look on social media, especially yesterday evening when this OpenAI story was breaking, you saw a lot of memes about the CTO, although she may be departing, that her seed funding would start at multi-billion-dollar or multi-million-dollar sums. So
Right. I mean, I would say if I were Sam, I might say I'm going to make her an offer she can't refuse.
Yeah, absolutely. Well, this is a story that we'll continue to keep on watching.
Yes.
It'll be interesting because even coming into this year, that organization had a lot going on with the top talent leaving and Microsoft helping that company as well. So we'll see where all of this goes moving forward.
That's going to be a heck of an IPO. Everybody's going to try to get a piece, right?
Yeah, absolutely. Yeah. So that's something to keep our eyes on. But Tai, as we head into the final minutes of our segment today, Friday will mark the end of the final full trading week of September. And hard to believe that as we head into next week, it is the beginning of the quarter as well as October. And as you mentioned, we have that jobs report coming up, but we also are keeping our eyes on the presidential election.
Yes.
So about a month to go until November 5th, and we get that debate coming up on October 1st, Tuesday evening, 9 p.m. Eastern Time. So you and I will be watching to see what comes out of that.
Absolutely. For news purposes, it's probably pure entertainment purposes. But you make a good point because the House and the Senate actually passed the bill to keep the government from shutting down, which we thought they would anyway because it's a bad look, particularly for the Republicans who are who start the whole process in the House to shut down the government 5 weeks before an election. It's a bad look. Mike Johnson, as we expected, used Democratic support to basically push through a bill that the Senate quickly passed and the president has signed. So now all members of Congress can go back home and campaign. Yeah. Right, so that's 33 senators, a third of the Senate, and all of the representatives. So I think they were really glad to do that. Usually, Republican holdouts, they hold out for various reasons, but it passed relatively easily, so the government will not shut down. And then the other thing, as you mentioned, as we get closer to the election, Vice President Harris has just talked yesterday about she wants to put $100 billion of tax credits to spur manufacturing in the U.S. And she's going to pay for it by, I love this really, taxing foreign earnings of U.S. companies. So those bad companies that keep their money overseas, they don't have to be, well, I'm going to tax that, and that's how I'm going to pay for tax credits for manufacturing. I mean, one problem and one sad thing is we don't have a lot of manufacturing in this country. We've geared ourselves into services, into technology, into finance. We don't really make things so much anymore. So, which makes, we've been watching Nippon Steel try to buy U.S. Steel, and actually yesterday it came out that an arbitration board ruled in favor of the merger. So there's a national security issue, and both candidates want to keep the legendary U.S. Steel, which was created in 1901 by J.P. Morgan himself, actually, to American made. But that's going to happen after the election, when hopefully that'll go through quietly, because it's a good thing for the workers, even though the unions are opposed it, because Nippon Steel probably makes steel better, cheaper, and more efficiently. So I think this will actually save American jobs, but manufacturing is going to be a tough lift for us in the United States.
And because you mentioned unions and manufacturing, of course, October 1st is the deadline. We'll see whether or not the longshoremen strike actually happens or not, because that will also affect the U.S. economy.
Maybe I have to buy that big TV from Costco very soon.
I think so. Well, Tai, as always, a pleasure covering the markets with you, and I look forward to tomorrow morning when we get the PC figures in.
Yes, can't wait.
And coming up, Dan Ha will be joining us for an interview with chef and restaurateur Hang Song Kim. Don't go away. We'll be right back.